gold is just this currency that has really been kind of a hindrance on silver. And I think if they can disconnect and look at the real true fundamentals behind each metal, I think that you'll see that silver prices should be substantially higher, pushing that ratio much lower.
Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And with us today is Phil Streible, the Chief Market Strategist at Blue Line Futures. Phil, thank you so much for joining us today.
Yeah, thanks for having me.
Awesome. Now, the first topic I'd like to discuss today is the silver market, because you're pretty bullish on silver right now, and you were just actually interviewed on Kitco, and you were talking about how you really think that the silver price will disconnect from gold, which is pretty surprising, because gold and silver trade, it seems like, just kind of like in lockstep fashion. They have one of the highest correlations we've seen between markets, but you see kind of a disconnect coming. So can you expand on that?
Yeah, I really believe that, I think that gold and silver, looked at both as a currency. I think that's a thing of the past where they're traveling together as this currency. And what I think is that the fundamental uses for silver far outweigh the number for gold. And, gold is just this currency that has really been kind of a hindrance on silver. And I think if they can disconnect and look at the real true fundamentals behind each metal, I think that you'll see that silver prices should be substantially higher, pushing that ratio much lower.
Now, you said essentially that gold and silver will disconnect. So what will that really look like? Is it just going to, like gold and silver, do you see rising, but just silver rising faster?
So I'm not as optimistic on gold at the moment. And the reason is that inflation and interest rates, if you look at the 7 to 10 year note, and you even go out to the 30 year, you can see that those debt instruments are selling off, which means that interest rates on the back end are starting to rise. That's because people believe that we will get through this whole COVID thing, the vaccines will be distributed, and we can get back to somewhat a new business as usual. So that's why those interest rates are going up. That's why the stock indices are continuing to go. They're starting to rotate out of, some of the COVID plays into more small cap and things like that. So I think that people will naturally chase the higher yield, and that's why you're seeing gold futures signal lower. If you look at the other metals that are out there, like platinum, palladium, copper, they've all had a great underlying bid recently on them because of this reopening, because of the infrastructure. And where it really comes down to silver is a commodity. It's not a currency, okay? They stopped putting it in currency in 1965. It is truly this commodity that is getting more and more demand in becoming more involved with different products. And if you look at mining production, it's been relatively flat to slightly lower. And you look at the demand is continuing to increase and outperform year over year. And those number of uses are going to continue to expand, causing the supply-demand imbalance and pushing silver prices up.
So to be clear, are you saying that you see gold prices falling, but then silver prices rising?
Yes, I believe that they will eventually, an eventual disconnect will occur between the two products. And you take electric vehicle sales, okay? They have been going up at a substantially accelerating rate year over year. They believe by 2030 that 20% of all the vehicles out there will be these electric vehicles. I think that the number could be even higher. So if you look at what the different uses are, there's such almost a minute amount of gold that goes in this product, yet there's a bunch of silver. There's quite a few ounces of silver that go into the battery control system. And, I believe that this supply demand issue is going to cause silver to all of a sudden, one day it'll be up 50 cents and gold might be up a couple dollars. And then the next day it'll be up, $1 and gold might be up $20. Gold will be the one that is trying to piggyback silver, not the other way around.
And what does this all mean for the gold silver ratio? Because I know back in March we saw a historic high for the gold silver ratio around 126, 125 to 1. Now we're down to around 70 or 80. What does this mean for the gold silver ratio?
So that situation, like to review in the past, was COVID, we're locked down, depression, sell everything, and get into the safety of treasuries, get into dollars, get into gold. The correlation between those were all about lockstep. Those were like the assets that people were choosing. They even sold their Bitcoin. That was crashing at the moment. So silver, the interesting thing is that I tried to get in the car and I drove to a bunch of different dealers and I was trying to buy it and they were like, nah, it's not for sale. We're not in the business of taking a loss. So they wouldn't sell the silver down at $11. You have a futures account to lock in the futures prices down there. But so that was a mere anomaly of a flash crash, basically. Now, as you see, silver prices have come up. Gold prices have come up, but not at the same rate. And now that gold silver ratio is about 75 to 1. Where I believe we're going to go initially will be in the 60s, then 50s and 40s. But that's multi-year fashion in order to achieve that. But in the short run, we're looking at, if we could break below 75 to 1, I really think you're going to see this slow and steady deterioration of that ratio favoring silver over gold.
Now, if we look long term, like historically, the ratio has been around 16 to 1, but more in the 20th and 21st century, we've seen a higher ratio, going all the way up to 125, 126 to 1. And we saw in 1980, we saw it dip to about 15 to 1, and then in 2011 around 30 to 1. Why do you think there's been this great shift in the gold silver ratio to be a lot higher in the last 100 years or so? And do you see that reverting back to its historic ratio?
Each one of those different situations that you outlined, there were different things like where, Hunt brothers were trying to corner silver, or rampant inflation in the 70s, or, that crash in 2008 where it seemed like we went deflationary and all investment assets were going down. I really believe that, the ratio is it's a full cycle investing approach. So that ratio is going to work off of whatever the next cycle is. And the next cycle is that green initiative, the solar panel demand, the electric vehicle demand, the medical uses for silver, things like that. It's just purely the number of uses are continuing to expand, while gold's use is really quite insignificant. There's nothing there. It's just a store of value that doesn't achieve any yield. So I'm not saying it's gold for the long run. If you have a price objective, a time horizon objective of 10, 20 years out, yeah, gold prices will probably be higher than where they're at today. What I'm saying is that you don't have to be this horse with the blinders on, I'm only long gold. You can look at other assets, trying to be a little bit more proactive, a little bit tactical about it. And that's where I think that this next wave is going to be that decline.
Now, some people are also looking at platinum right now because it's a little over half of gold's price right now. Normally, we see platinum above gold's price. We've seen a little bit of a rally since the beginning of November, about 10 or 20%. What is your take on the platinum market right now?
I was really quite bullish on platinum in the last week to 2 weeks. I mean, it does have a correction going on right now. It might have got a little bit ahead of itself. It does have a seasonal tendency towards the end of the year where it outperforms gold for the first 2 months. The thing about platinum, again, you go to the other segment on vehicles, and when things reopen and we see vehicle demand pick back up, the green, zero carbon emission, green energy initiative should continue to have more demand for platinum, palladium, and rhodium, which go in catalytic converters, and will try and achieve some of these policies that have been set forth by different governments around the world. So I really like big corrections in some of these tactical metals. If silver went down to $22, I'd be long-term bullish on it. If platinum has this correction and we break back down to 950, I really like it down there. And these are all achievable levels. And then you need to hold, and you need to position size, and you need to look at balancing with other things like short gold against it.
Now, when you talk about I guess shorting gold against platinum, is that kind of from the perspective that it's really out of whack right now because platinum is normally higher than gold?
Yeah, that really changed. I mean, quite a bit. Especially, it was palladium was the punch on platinum, and it's never been able to recover because of the uses of palladium over platinum, because it's held in the diesel vehicles and things like that. And you have different countries are using more and more of it. You also have that supply shortages in South Africa, and that's what rivaled platinum's prices and really took it out. I mean, historically, you look at gold versus platinum, gold was at 1,000, and I remember platinum was at 2,000. It was coming into like a Valentine's Day many years back. That was like the first time that ratio had hit that in a long time, and I think it expanded out till about $2,500 was like one of the higher prices. But I really think that fundamental uses of these metals continue to outweigh the benefits of owning gold.
And one of the reasons you're not as bullish on gold right now is it because of the vaccine and the possibility of the economy kind of going back to normal?
Yeah, the economy, I mean, it'll never be back to completely normal. I mean, some of these jobs have been lost forever. They'll never be recovered. I mean, we've made so many adaptive changes. I mean, where I would go to a studio and things like that, they might not need the same staffing that they had before where I do one of these videos, because we're doing it with Zoom and Yeti and all these products and things like that. And so I think that the economy will never get back to the same. However, I do believe that we will see an accelerating rate once the vaccine is being distributed effectively and proven to be effective. That we'll see an accelerating rate of growth and jobs coming back, which will weigh in on gold prices. Where I think gold starts to get another bounce and it takes its next leg higher when all the debt weighs in, is when the acceleration of growth on jobs, on GDP slow down in the back half of 2021. That's why when you look at a lot of banks, a lot of major banks with analysts that put out their projections on gold seem to be at both ends of the spectrum. They either have a $1,500 to $1,600 an ounce target, or they have a $2,100 to $2,300 an ounce target. And it depends on how they're looking at the product, because it looks like it's going to sell off first before going back up.
That's really interesting. You look at the economic growth and the job growth and everything going into next year, kind of being very positive, maybe because we're coming from such a low point. And then after a while, the growth will kind of flatten out because we've already grown back a lot. Is that kind of what you're saying?
So I'll give you a prime example. If you look at that jobless and the unemployment data that came out, the employment data, when that payroll number was released, it was like 245,000 jobs, which was a disappointment. Gold got a rally on that news. Then when the details come out, devil's always in the details. The previous months had much larger increases in job creation. So you saw gold prices correct shortly after that. And what you saw was economists had increased their GDP expectations for the fourth quarter. And then because of that revision, you'll see that quarter over quarter, we're going to show larger growth. So, that's how we get this like robust move in interest rates, this robust move in small caps and everything else. When the vaccine proves itself, the jobs number will take another leg higher because now everyone's going to go back to work and things like that. And then when the number is completely saturated in, the people that have lost their jobs completely or are completely out of the job market, all the economic data will start to contract. And at that point, again, people are going to be scratching their head and be like, where are we supposed to go? And then that's when they go back into gold, back into short treasuries and things like that. It's just you have to look at what segment the economy's in. And it's very easy to move with that. You don't have to be just all long gold in one shot. You can sell it and then you hold your physical, whatever you're comfortable with, whatever you can sleep at night with, and then later in the back half of the year, I believe you will get much better prices and better entries.
And what do you see for the miners in gold and silver as we move into this next year?
Okay, so I'm not bullish on miners at all. I actually am quite bearish on the mining stocks. And the reason is that I've always been under the belief, always, since if you want to own gold, if that is your primary objective, why not just buy gold or silver? Why do you have to complicate the process by getting a miner involved? When you look at miners, you really need to look really deep under the hood on there. You need to now all of a sudden, because instead of you just worrying about the price of gold, now you look at energy costs, which are going up. Crude oil prices are going higher. Gasoline prices are going higher. These are major input costs on miners. Interest rates are going up. They're probably not going to be doing as much acquisition because a lot of that already occurred. So you're not seeing a growing environment, and the price of the product that is the end result that they are producing, which is gold, which is a bar of gold, the price is signaling lower highs. So, if we're running a business, whatever it is, a hot dog stand, and all of our input costs are going up and the price of hot dogs that we sell are going down, prices of miners should go lower. So that's my basis on it. I'm trying to take a logical standpoint at it and not be this all in, like I said, horse blinders on, gold can only go one way.
Definitely. Well, Phil, thank you so much for joining us today. I guess before we let you go, did you want to share with the viewers where they can find you online and any last thoughts you'd like to add?
Yeah, you can always email me at phil@bluelinefutures.com, or you can go visit Blue Line Futures. We've got a great report that we give people complimentary 2-week trial that does cover the gold market and oil and other things. It's called the Morning Express. And, we love to, be able to share more information and give out some of the ideas that we have.
Fantastic. Phil, thank you so much for your time today.
Awesome. Thank you.